Tonight, we're going to talk about the wonderful world of crypto and blockchain. There are a lot of really interesting companies out there that are utilizing the technology in many interesting ways, and we have, I think, some of the top leaders up here tonight to talk about it. So we'd love to have each panelist introduce themselves going down the line here, and then we'll save some time at the end for Q&A, so please hold those, but let's start with Lily here on my right.
Sure. My name is Lily Liu. I'm the CFO of 21. Some of you, I think, are already on the platform. Essentially, what we are is we're a platform that allows you to click some buttons and earn some Bitcoin today. And in a few months, you can click some buttons and you can earn our token, which we're going to be launching called the social token. And the reason why we came up with this is because up until now, it's been very hard to get digital currency. You have to mine it, which is really hard. Or you can sign up for Coinbase and buy it on exchange, but that also requires a bit of commitment. Whereas on 21, you can basically get a little bit of digital currency for doing tasks that you might do otherwise, which is primarily emails, the simplest form of task, taking some surveys, or doing other sorts of tasks that sort of take a minute or two of your time. And so sort of the broader idea is that we're sort of a marketplace for a few minutes of your time, if you will.
My name's Brad Garlinghouse. I'm the CEO at Ripple. Ripple is a blockchain technology company that sells technologies to banks to enable real-time settlement between banks. We focus on cross-border payments. We work with about, I think we've publicly announced, over 90 banks around the world, ranging from Santander and Standard Chartered to smaller banks kind of around the world.
My name is Kathleen Breitman. I'm the co-founder of the Tezos blockchain. Tezos is a new blockchain in the same vein as Ethereum and Bitcoin. One unique feature that we have is an on-chain governance mechanism to facilitate upgrades to the protocol.
Hi everyone, my name is Adam White. I'm the Vice President and General Manager of GDAX. GDAX is an institutional grade exchange that's owned by Coinbase. Coinbase, in its simplest form, is kind of the fidelity of cryptocurrency. It's an easy place to buy, sell, and store digital currencies like Bitcoin, Ether, and Litecoin right now. Stuff I focus on GDAX is really serving more of the Wall Street or institutional crowd. So when you look at kind of the crypto hedge funds that are beginning to stand up, or the traditional kind of finance 1.0 players, as they're looking to begin trading this digital currency, we're trying to be the US-based regulated compliant exchange that they do that on.
Awesome. So before we jump into the panel, I actually want to get a show of hands of folks in the room to see who has a strong understanding of the differences between a cryptocurrency and the blockchain itself. Awesome. So I would like to start with having Lily just give a really quick primer on, just the overall ecosystem and what those two things mean functionally.
Sure. So blockchain is distributed database, basically, hosted on a network of arbitrary size of peer-to-peer nodes. Without sort of a centralizing sort of authority or force, right? So that's sort of a technology going to be applied in a variety of different use cases. Cryptocurrency is probably the dominant use case, and there's obviously a lot of instances of it. We can sort of think about it as the cryptocurrency as sort of being the transaction type, or sort of the asset which is being traded back and forth, which is obviously a very good initial fit because currency is something which is fungible, liquid, low transaction costs, and that's a very good fit. But now what we're seeing is a number of different assets being digitized and sort of placed on a blockchain. So for example, supply chain and various actors in supply chain, so an organization mechanism, coordination mechanism for people in that ecosystem, right? Or other folks are trying to take things that are typically securitized on Wall Street, put them on a blockchain and make those sort of reduce transaction costs, make them sort of more transparent and tradable. What's kind of interesting is a blockchain enables you to take a number of assets which you didn't previously consider a currency and actually start to attach sort of currency-like characteristics to them, as we see Filecoin doing with data storage, right? And as we see with a number of folks that are taking real-world assets, putting them on a blockchain, and now you can actually sell fractional, buy and sell in a very fast sort of cadence, fractional assets, like even real estate and some of the more traditional assets.
Perfect. And so I think it's very clear to everybody, cryptocurrency, like many other currencies, is fantastic as a store of value or exchange. But a lot of the innovation is happening at the blockchain level. And Brad and Kathleen, both of your businesses are really kind of innovating on the blockchain itself. I would love to understand from you how yours is different and what you're aiming to solve with that.
So I'll start. Ripple takes an approach that early on I think was contrarian in the Bitcoin world, where the idea being that Bitcoin, I don't think, is going to be a panacea for all transactions. And you are seeing now a world where obviously there's lots of tokens to serve different use cases. We focused on making sure that the performance of XRP, which is our digital asset, is very, very efficient for payments. So in contrast to today, a Bitcoin transaction on average is about 4 hours. We complete a transaction in 3 to 4 seconds. From a throughput point of view, we're seeing 1,500 transactions per second compared to Bitcoin at, well, I haven't seen the latest data. That is not to say, and I want to be a little bit careful about that. I'm actually long Bitcoin. I'm a believer. I just don't think Bitcoin is going to solve all the transaction problems and some of the things that Lily talked about around security. It's just not the nature of proof of work as a model to manage a blockchain has its limitations, as we've seen. And I think you're going to see specialized use cases of other blockchain technologies applied to specific customers that are better.
Mm-hmm.
So Tezos is a smart contract platform. Smart contracts are a way to deploy business logic in a decentralized fashion. We think that offers some really cool and unique innovations when pushed on a blockchain. So Tezos extends this idea. It also allows for the community to come to consensus on upgrades it would like to see instantiated into the blockchain. And what's more, it also facilitates a more seamless way of enabling these upgrades. So right now, if you want to add a feature to Bitcoin or Ethereum, you have to go through this really arduous hard fork process. Tezos, we think that upgrades to the protocol ought to be more passive to facilitate ease of use on the end user.
Got it. And so, Brad, you started to touch on this, but based on the way mining works today, there's a lot of talk about just speed of getting transactions done. Can you talk a little bit about where that is today and how we can get to a point where you're processing transactions at the speed a lot of applications need?
Well, I would argue that to answer your question on a literal basis, like, can you get from point A to point B with a proof of work model to truly have kind of the efficiency that I think you need at scale for payments, securities, for a lot of the use cases that I think people see as very big market opportunities? I think there are some fundamental limitations around a proof of work model. And it's the reason why Ripple, and you've seen others, adopt a consensus-based solution that allows for a much more seamless scaling. And I think we can debate. I'm not saying proof of work is wrong. I'm just saying it doesn't solve, it's not the panacea for all of these different kind of transactions.
Got it.
Well, there are some interesting innovations in this space with respect to proof of work. I think Bitcoin NG is a particularly interesting implementation that would make proof of work more efficient. I'm a little biased because Tezos is launching with something called delegated proof of stake, which by definition has people assuming the role of miners with their token holders. So it's a more lightweight approach and inexpensive approach.
Got it. So I can no longer open my Twitter feed without reading about another ICO or an email from another founder saying my job is quickly going away. I'm curious to get all of your opinions on where we are in the ICO market.
I think the challenge here is you can't put aside the legalities, and I think the mistake that I think some in the crypto blockchain world have done, even looking backwards, is governments aren't going away, and governments do care about regulation. Governments do care about KYC. They do care about, if you're issuing a security. And frankly, on the ICO thing, the thing that I think entrepreneurs are forgetting is that the SEC regulates securities to protect investors and entrepreneurs and companies. I think that there are going to be many, many years ahead of class action lawsuits going after companies that have done ICOs. And by the way, you just can't put the legality question aside. Is it hypothetically a fundamentally interesting way to put you out of a job? Sure, hypothetically. But we live in real worlds with real laws, and I think that what I worry about is that the ICO market has created, particularly around Ethereum, a lot of interest. And you obviously see China has taken a strong statement around ICOs. You've seen the US government take a lighter touch so far. I would predict that you're going to see the US government take a heavier touch in the future, and I think it will change the nature of the whole ICO conversation.
There's no question that there are going to be sort of legal confrontations in this area. What I might point out is that it is sort of because of some of the unintended effects of those regulations over time, which has really sort of cut off a great number of people from having access to capital, right? Which is, not to say that the vast majority of ICO projects out there are really any good at all, because essentially what's happening is you have a number of seed stage companies that are going out raising rounds from people contributing $10 or $1 million, and they probably still have the same quality profile as the seed stage companies that come through the more traditional route of going up and down Sand Hill Road, right? So there's no question that a number of those folks are not going to be successful, and there's going to be a number of surprised people as well at the end of the day, just sort of the amount of money that's going in there. But what I think is very interesting about it is, no longer is it a requirement that if you want to start a company and you have a good idea, you basically have to uproot yourself, come to Silicon Valley, spend a few months networking, relying on a little bit of luck as well as your own competence to raise a few $1 million, the vast majority of which is going to go into your rent and salaries to go support that rent, right? And so there's also something with that model which could potentially be improved upon, and ICOs are sort of, I would say, sort of testing the waters there, and there will sort of be a middle ground which is found.
Yeah, I mean, ICOs are not like a form of alchemy. They're not going to make a bad idea into a good one. And I think that that's kind of what most of the fervor has been around, is like people will see this like genuinely insipid idea that gets a lot of funding because people on the internet say, it's going to be worth X amount in the future. And there's definitely a toxic element around the spirit of some of these ICOs. But on the more encouraging note, I've definitely seen like the conversations get more sophisticated even in the short period of time that this has been a phenomenon. It used to be the case that like all you needed was a white paper. Now people are like demanding code. Whether or not they run the code is a separate issue. But I think the audience is getting more sophisticated, and this like meme like, oh well, I can't really quite raise a Series B. I'm going to go and do an ICO instead with what I call Cirque du Soleil coins, because they have to contort themselves into like making a token make sense in their model. I think there's been a lot of like positive encouragement just in the short interim time that this has been this odd press phenomenon, and I'm happy to see that like folks like the SEC are taking more of a wait and see approach and trying to first and foremost protect consumers, but also not like punishing the innovators in the space, because it truly is an interesting way to like deploy capital across the world, as Lily mentioned and Adam mentioned.
Yeah. It's fascinating because anytime you see an industry that's breaking the law, there usually comes out a couple of winners in that space, and they're usually the folks that work with the regulator. And I think back to marketplace lending way back when a lot of folks were getting pinged by the SEC and ended up getting shut down by the SEC, and a number of other folks actually proactively shut down and said, we will work with you and help define what this industry is going to be. And I think some of those folks ended up coming out on top. And so from our perspective, we hear move fast and break things in fintech and are very scared by that as investors. So our advice is to always work with the regulator every step of the way, and hopefully you come out on top. So you started to mention some interesting applications that the blockchain is really kind of purpose built for. I'm curious, what are some applications that you have all seen as of late where something really does fit this technology? Brad?
I'm biased. Ripple has very much focused on understanding a specific use case, a specific customer, and that is cross-border payments. There's $155 trillion that flows cross-border every year, at the cost of which is measured in kind of 100 basis points. We're talking about over $1 trillion of cost globally to manage cross-border payments today. Blockchain technologies are a perfect application for managing that. Again, we manage that between banks. We feel like the bank serves an important regulatory element. Consistent with what Michael is saying, we have kind of from the get-go, once a regulator understands what Ripple is doing, and we're not circumventing regulatory frameworks, we're not circumventing KYC requirements, know your customer, or AML, anti-money laundering, that tends to serve us well. My critique and observation, and partly because Hyperledger is not represented here, I'll pick on Hyperledger. If you go to the Hyperledger Wikipedia page, it talks about 143 different use cases for Hyperledger. If you have 143 different use cases, you might as well have 0. You have to understand a customer. You have to understand the problem you're solving. And if you understand the customer, understand the problem, you can actually deploy solutions towards that. I think it took Ripple a while. Ripple's been around for about 5 years. about 3 years ago, we decided to really focus on the bank solution, and it has taken a while to get some momentum. It took a year to sign our first customer. Now we've passed 90 plus customers. So I think the observation I'd make to anyone thinking about this space is there's a lot of amazing use cases for blockchain. Pick one.
Yeah, I think lowering the ticket price for financial services is a big use case, and it's something that can't be ignored, especially given that the Bitcoin white paper talks about displacing the banks, so on and so forth. I think there's also something really interesting to be said for online content providers owning their information and their data across different platforms, for example. That's a cool one that I think goes a little bit under noticed.
Mm-hmm. I'll take a slightly different perspective. I think one of the things that I find really interesting that not just one blockchain, but actually multiple blockchains can do is this idea of a decentralized or trustless escrow. So when you think about Bitcoin, there's something called end time lock, which basically says, I'm going to put my Bitcoin at this address, and under these circumstances, then it's going to be released. This is not too different than what Tezos does. One of the first things we saw happen just earlier this week or last week was we saw what's called an on-chain atomic swap. So effectively, two different blockchains that are completely separate traded assets between one another. And why I think this is really unique is coming from an exchange perspective, what I'm constantly looking at is how are people exchanging or transferring one asset to another. So when you start having these unique applications of blockchain technology that you kind of have a meta blockchain, not just one that operates independently and in a silo, but now you have multiple blockchains that can talk to one another and you can move seamlessly between them. I think that's what's going to get us to what the mission of Coinbase, just to take a step back, is to help create an open financial system for the world. So we are agnostic to which digital asset that happens with. And personally, I think it's going to happen through a combination of many of them. But the way in which you can do that is I think you fast forward 5, 10, 15 years, people don't know that they're using a digital currency. To me, it's like the same way. I have no idea how SMTP works, the protocol for email. I just know I punch in an email address and it goes to someone else and it's kind of routed and taken care of. I think digital currencies will get there one day, and that typically payments find the path of least friction. And that just like the same way I don't understand how my credit card works, I just know it moves value from one person to another. I think digital currency will get us there too. And things like on-chain atomic swaps are going to help facilitate that, and I think they're amazing.
So I think that blockchain could be quite interesting for the aggregation of health data. And so, typically when you think about personal identifying information or sort of private information like that, there's a bit of a tension between this information being private, but then also this information being aggregated so you can do research on it and sort of serve the greater good, right? That's a constant tension that you have in HIPAA standards and then what, university research on various data sets. What you can potentially enable with the blockchain is you can basically, have as private and personal information like health data on a blockchain and selectively allow it to be aggregated so that, for example, genomics data, right? Like I recently went and got one of those blood tests, and I was really surprised to find that they actually didn't have very much information on like this sort of borderline mutation that I have, right? And I thought, how is this possible that this is a $200 test, yet people don't know anything about it, right? And I think, one of those reasons is because there isn't sort of a private and also incentivized way for people to actually go and share that data, and potentially it's something that you can sort of use blockchain for to overcome privacy in an aggregated environment. Would be one example. Yeah.
Adam, I'd love to go back to you. You mentioned kind of an open financial ecosystem. Recently China came cracking down and said they're not going to allow ICOs in the region anymore, which was really kind of the big first piece of regulatory action since the BIT license in New York a few years ago. I'm curious to get your perspective first on that ruling, and then also what does good financial regulation look like for this market moving forward? What are some things that you would like to see, and perhaps some things that you feel like regulators maybe ought to not touch?
Yeah, between the PBOC and Jamie Dimon, it's been a tough couple weeks for
That's my next question.
Yeah. I don't know. I think at the end of the day, what makes digital currencies or open networks, kind of like Bitcoin, so powerful is that no one government or no one jurisdiction can stop it. What happened in China, personally, I don't think is that big of a surprise. I've been at Coinbase for about 4 years, and I started back in 2013. And back then, we kind of saw a lot of interest, and we saw China kind of crack down, and we saw this like kind of a pullback, and then we saw it open back up. So it's kind of been consistent. it shouldn't be that surprising because you look at the internet that China has, it's already kind of this version of a permissioned internet, right? So this idea of a permissioned digital currency is not out of the realm of possibility. I think what I like to see more of is you're going to start having, in my opinion, I think, and now I'm thinking a bit progressively, 8-10 years out, you're actually going to have countries starting to compete with one another to be kind of incubators or the right place to attract this type of talent and technology. So it's really interesting. If you go to Europe, there's different like crypto valleys, there's different like kind of Bitcoin or blockchain ecosystems that are developing in different parts of the world based on kind of more intelligent, innovative, light touch regulation. I think there's a big risk that if the US follows suit to China or others do, comparing digital currency to the internet is quite a stretch, but I don't think it's that far off. I do think we're in like 1992, 1993 terms right now. These are the early innings. These are like the very first days of this technology. The risk is what China does that other countries follow suit and you kind of lock down this technology that could be really powerful. So to answer the question, Michael, about like what does good innovation or good regulation look like, I think the US is actually a pretty good indicator of this. You find a balance between the SEC coming out and saying, look, the Dow token was obviously a security, and we're going to put out a broad, a cross-bow warning. If others do that, there will be consequences, and don't make that happen. But they didn't outright ban ICOs. We saw the same thing happen for the state of New York. The state of New York said, look, we cannot allow digital currency exchanges to just operate freely. We saw it happen in Japan with Mt. Gox. $700 million of Bitcoin stolen because of poor security standards and possibly fraud. So New York's come out with a BIT license where they said, if you want to operate digital currency for our state citizens, you have to get this license. It's a tough license to get. It took us years. But I think countries like the US are finding this balance between how do we let this technology flourish, but at the same time protect our citizens from bad actors.
Got it. Covered it all there. Great.
Right.
So you mentioned Jamie Dimon, and I think we couldn't have a panel on crypto and blockchain without talking about some of these statements. And I would love to get your guys' reaction to not just the statement, but the way of thinking. He said, "quote It's creative something out of nothing that to me is worth nothing. It will end badly." And he went on to say that people will be put in jail and the government's going to crack down on everybody involved. How do you respond to kind of that frame of thinking today? Curious to get your point of view.
Somewhat sarcastically, I'll start with, the first thing that somebody said to me about this is, Jamie Dimon's trying to talk down the price of Bitcoin so he can start buying. Look, I think that today JP Morgan sits at the top of the financial ecosystem. They make a technical term of a shit ton of money around payments. Look, it's not that surprising. If I were a shareholder in JP Morgan, I'd be glad that Jamie Dimon is out there saying this. There's also a cover of Newsweek magazine in 1996 that said the internet is overhyped. Sometimes legacy players miss evolutions in the marketplace, and maybe the last thing I'll say is, look, Ripple knows very specifically, and I think many people in this room probably do, JP Morgan is absolutely investing in blockchain. Mm-hmm. There's no question about that. So for him to come out and say that, it's all fake and people are, going to be killed, and, my favorite, and almost one of the Kathleen, something she said earlier, is like this idea that he said it's going to close. Bitcoin's going to close. What does that mean? I mean, you can't even, anyway, so I think maybe in a few years, he might look more like the CEO of Blockbuster when Netflix was emerging.
I thought it was well timed.
That'll be the title of the blog post for this.
Yeah. I mean, it was well timed with the announcement coming out of China. It was very well timed. And I didn't take it very seriously because, for example, in March, they announced a partnership with Zcash. They are a leader in the Enterprise Ethereum Alliance. They're doing a lot of stuff with blockchain. So they obviously think blockchain is good, and he only specifically talked about Bitcoin, so, and then today I think the CEO of Morgan Stanley came out and actually spoke well of Bitcoin and cryptocurrency, so I didn't take it very seriously.
We're all just kind of talking our own book, right? So, yeah. I mean, I'm pretty sure if Satoshi Nakamoto was asked for comment, he would reciprocate the sentiments.
Yeah, I mean, I have all the respect in the world for Jamie Dimon, but someone at Coinbase said it's akin to asking the Postmaster General what he or she thought about email back in the mid-90s. It's the same point Brad said. That said, I think we're certainly, I mean, no one wants to call, peak hype, peak bubble. If you do look back at the price of Bitcoin, you could look at this for many digital currencies, but Bitcoin specifically, we see these fractals, right? So we see rapid growth, then you see a recovery. You kind of see a plateau and kind of stay linear for a while, and then you have another catalyst and you see another hyper growth period. This has happened 3, 4, I think 5 times, notably in Bitcoin. Every time after you see one of these kind of rapid growths in the correction, the timeline to the next one goes a little bit longer and the next run-up's a little bit less severe. So I think we've seen this before, we're gonna continue to see it happen. By no means am I calling the top and that we're at the late stages or early stages, nobody knows. I think what I find fascinating is we have this magic moment when a lot of people first get digital currency, first get Bitcoin, at least for Coinbase, and it's either 2 things. It's when they buy a bit of Bitcoin and they actually see the price change and they go, I lost $5 or I made $5. Something happens, it becomes real. And on the exchange side, it's when they're seeing the trades happen. And they go, well, who's on the other side of that trade? Isn't someone saying what the price is? And we go, no, we are not a counterparty. We are just the marketplace, the meeting room where everyone comes to trade. And all of a sudden it clicks and it goes, wait, there's no government or bank or business behind setting the price. These are what willing buyers and sellers will trade for it. I think what Jamie Dimon says is somewhat factually true, that look, there is nothing behind it. Digital currency, just like money, is the purest form, in my opinion, of network effects. It only works because other people also use it as well. But certainly, we're going to see the price recover at some point. Jamie Dimon's going to pat himself on the back. And then 3 years later, we're going to see digital currency take off again for whatever reason, and we'll be right back here.
Awesome. So we have one last question, and then we'll open it up to the audience. I'm not sure if we have a mic that'll go around. But you guys are all incredibly successful operators, and there's a lot of really interesting stuff going on in crypto, fintech more broadly, and other categories. I'm curious to get your point of view. If you were to stop what you were doing today and go start a company, what would it be? Lily, let's start with you.
What I think would be interesting to see happen is if you start to sort of see the merging of the crypto world with more traditional Wall Street. And so I sort of look forward to the moment when a struggling public company, right, is basically delisted and then re-ICO'd as a tokenized network. And I think that maybe in a few years, a bunch of the sort of LBO shops out there might actually take that approach and put a couple $100 million to buying a distressed asset that has millions of users, lots of partners that would benefit greatly from having a tokenized network. That'd be interesting.
Can I cheat and give 2 answers?
Please.
The first one, I think there is a lot of interesting stuff going on in institutional digital assets. I think Adam's right that it's very difficult for anybody to predict where the markets are going. I think one of the things that's been fascinating for Ripple to see, because we hold a lot of XRP, we see institutions coming to us and wanting to buy block purchases. And so, look, it's I don't know what the numbers are today, $150 billion market today overall. And I think the big money hasn't begun to come in. And I think you're starting to see big institutions measured in tens of billions and hundreds of billions of dollars take a serious interest. And so I think the kind of institutional funds, and I know there's probably people in this room that are looking at digital asset funds. There's some notable ones that have already been created. I think it's an interesting space. But if I weren't doing blockchain, I'd do something in genomics. Not just because Lily was talking about it.
I'm probably not going to win many feminist points with this, but what I've learned during the course of my time at Tezos is that I really enjoy working with my husband. He's a really talented engineer, and he's a statistician by training. One area that we think is really cool and interesting is probabilistic programming. So I'd like to do a company with him again and remain on the operations side while he does his engineering thing and just keep on spending way too much time together.
I'd flip to the other side of the table. I'd go work in regulation. I think it's the biggest risk to digital currency not succeeding. And it kind of sounds contrary to the stuff I just said, but I think by no means is like China outlawing digital currency going to affect the long-term success of this technology. In the near term, absolutely, and that could be a systemic risk. Spent a bit of time in DC. We do some education, generally just serving as a resource to law enforcement and policymakers. And there's just still a lot of lack of education, just people not understanding how digital currency works, what it is. There's great nonprofit groups out there like Coin Center that are doing some good work. If I could quit tomorrow, I'd probably go do something in that space.
Awesome. Questions from the crowd? Got it. So the question is, correct me if I'm wrong, how do you guys think about forks moving forward and your essentially capital going into two different currencies, right? How it affects the capitalization and the integrity of the coin?
I'll just say something quickly. Fred Ursom, co-founder of Coinbase, put out a Medium post on forking just a couple weeks ago and said net, it's one of the best things that digital currency has going for it, is that anyone can take the protocol, the software, it's open source, and say, I don't like what it represents or the direction it's headed, and I'm going to take it this direction. And people can up and vote with their feet and go follow it. The only way it has value is because the open market values it as such. What I find fascinating is that almost every time we have a fork, net, the sum of the parts is greater than the whole before the fork. Right? So this happened with Bitcoin, it's happened with Ethereum and Ethereum Classic. It's a really interesting phenomenon. I think part of that's just because, one, people are hedging their bets, right? Is Bitcoin or Bitcoin Core, Bitcoin Cash, which one's the real version or which one's going to win? People don't know. And two, if you look at the total market cap of all digital currency, it's about 150 billion. I think that's a fraction of the market cap of Apple. And if you don't believe that digital currency is going to have a far more profound impact than Apple, I'd be surprised. So part of this is I just think we're still very early innings, very small, and it's still a minute amount of capital, all things considered.
I'll maybe just answer part of that question. I think the integrity part is really important. I think as companies increasingly have real customers and are solving a real problem at scale, enterprises don't want to adopt things that are not stable. When you have banks saying, this is, for Ripple, when you have banks saying, hey, I'm making a bet, and it's not a simple, hey, let's just light up a Salesforce instance and for $20 a month or whatever the pricing is. The stability matters for enterprise-grade solutions.
So the Tezos position paper was published in 2014 at a time when people were talking about Bitcoin as powered by math or backed by math, which I always thought was kind of funny because you can't trade in like a Bitcoin for a unit of math. Like it doesn't really make any sense. But in any case, there was like this fad that there was like this algorithmic like platonic ideal that all these cryptocurrencies followed. And what we've seen, in fact, is that there's quite a bit of politics behind all of this, and there's quite a lot of game theoretic tensions between the role of miners, the role of validators in a network, and the token holders as end users. Tezos fundamentally thinks that things that are rather non-controversial and a net good to the community, as represented by their interest through token holders, ought to be a passive upgrade, and things that are more contentious, like chocolate or vanilla, like we need to determine which is better for us to go forward with this blockchain, ought to be represented through something like more revolutionary, like a hard fork. So our whole thesis is that these things are fundamentally driven by human politics, and there's actually a much softer side to cryptocurrencies than we were first willing to concede, and it's best to just give a formal forum for these types of issues to be sussed out through an on-chain governance mechanism, rather than just hope that the right people who signal with their Twitter handles get the most clout from Chinese miners. So.
Any other questions? So thanks. I think the question was, which currency is going to have widespread adoption, i.e., what should I buy when we leave here?
And for a consumer use case, I think he was
correct. And then, what is going to be the one for the consumer that you can use at the point of sale today when you're going out shopping in stores, which I actually think is a really interesting question, and when that can actually happen and why and how. Brad, you want to start?
I think consistent with some things I said earlier, Ripple, I think years ago took kind of a contrarian approach, which was where a lot of people are focused on consumer use cases. We took a much more enterprise infrastructure approach. The question presumes there's something wrong with fiat, and in some countries there is something wrong with fiat. I think that's in the United States, I think the dollar works pretty well. I think we're far from that world where I'm going to, actually if I can take another quick poll, you started with one, maybe. How many people here have actually spent Bitcoin to buy a good of some kind? A handful. It's not easy to do, There's not a lot of, some sites that used to list, hey, we'll accept Bitcoin, have taken that off. And I think it's really, unless you're really solving a problem, and that problem isn't Silk Road or related, that's its own use case. I'm not saying, anyway, I think it's a long time before we see that selling your Bitcoin at a point of sale system.
What I might add is, so if your question is more generally about consumer sort of use cases for digital currency, I would say that at least here in the U.S., buying coffee and other sort of bread, bread at the bakery or something like that, I don't know that that's really a problem that needs to be solved, right? But what I think digital currency is potentially very good for is for sort of digital consumer transactions, right? Which are inherently borderless, are inherently sort of not at the point of sale, which could be between you and multiple parties at once. And those sort of payments use cases are actually sort of very high friction and not very well solved today. So I think that's probably where you're going to see more applications of digital currency, and particularly as peer-to-peer transactions become borderless and start to take very different forms. That's where sort of flexibility of digital currency is going to be pretty powerful.
Any other questions? Do we think the card companies, Visa, MasterCard, et cetera, are going to become obsolete in the future is the question.
I mean, I think Amex is already kind of obsolete, just looking at some of their decisions. I like Visa, MasterCard. Like, I can't exactly speak to their futures, but I think there's definitely a pull towards like lower transaction fees and things like this. So,
I think there's kind of a Silicon Valley. I've been in the Silicon Valley doing this stuff for 20 years, and there's kind of a common refrain that you always overestimate what's going to happen in 5 years and underestimate what's going to happen in 10 years. Look, I think in the next 5 to 10 years, there's very little that happens to Visa and MasterCard. On the other hand, if you think about fundamentally what blockchain technologies are enabling are two parties to transact without a central counterparty. Who are the biggest central counterparties on the planet? Visa and MasterCard would make that list. Securities, settlement, a number of those players. So I don't think it necessarily makes them go away. I still use my Amex. I think Amex is still growing. I'm not 100% sure about that. I don't think they go away anytime soon, but I do think they will have to evolve and adapt and change. And if they don't, I think there is risk. But you were seeing all of those companies kind of invest and participate in experimentation right now. I mean, you don't really see much beyond experimentation, but I think they're looking at it for sure.
Cool. We'll do one last question from the crowd here. So I think the question was effectively, how do we move the store of value today, which is in effectively fiat currency, into crypto without hyperinflation? Did I get it? Okay.
From an exchange perspective, right, this is where I think Coinbase and GDAX try to come in, which is create a really simple and safe product that anyone can get access to, because the idea of, I think, hyperinflation is just that the buy demand far exceeds the supply, right? So if you have a whole bunch of new capital entering the space and it's all trying to move from dollars and gold bars and barrels of oil and futures on other commodities into what I think is very, very likely going to be a new asset class 3, 5, 10 years down the road, you need to have kind of a marketplace that can absorb that type of capital. I don't think we're seeing that right now. That's one of the reasons why we've seen a 10x increase in Bitcoin over the last couple of years. I do think as we see more kind of institutional grade exchanges come online, as I think we start to see the ability to short. Right now you can only go long Bitcoin. There's no kind of overnight repo swaps where you can borrow and short digital currency. You have a lot of this upward buy demand. I think as the infrastructure starts to really come up another level, I think we will see a path that'll allow that capital to come in without overinflating the price.
Good. Awesome. Well, thank you all for being here tonight. Please join us for drinks and networking after. Yeah, give a round of applause to the panelists.